everybody. We are a couple of loan officers, and we're going to go ahead and talk about the Fannie Mae guidelines today.
Hi, everyone. My name is Bathsheba Payoute. My broker is Gross Capital, and we have over 100 lenders that we work with. We also do commercial lending, HELOCs, refinancing. We help you get into those manufactured homes, your first-time home, or purchasing homes. So we're excited to be here to educate you on home ownership, as well as these mundane guidelines that are very important. So thank you so much, David, for having me here and having this opportunity to do this. And it's going to be exciting and fun.
My name is David Dowd, and I'm a loan officer out of Texas, San Antonio to be precise. I can also do California, and I own my own company, David James Investments, but my brokerage is Equity Smart Home Loans as of this recording. And so, yeah, we look forward to helping to educate fellow loan officers and also for those who are just interested in the guidelines. So today we're going to be covering the full part of Chapter B 1-1, which includes about 3 different sections. And so today's date, as of recording this, is May 26th of 2024. So just as a disclaimer, if anybody's utilizing this as their guideline walkthrough, be very careful because guidelines change all the time. I mean, I think I was just reading it. It was like May 1st and May 3rd were some of the guideline changes of each of the sections, right? So
Right.
always be careful. Always make sure it's up to date before you go on to it. But we'll kick it off here. Bathsheba, go ahead and tell us what you thought and some of the highlights of the first section here, which, let's pull up my notes here. It is B1-1-01, which is the contents of the application package. Go ahead and kick us off.
Find what we're looking at. It's on sellers/guide.fanniemae.com. So it talks about the application process. So when you decide to buy a home or refinance, you're going to have to do a full application. This application is called the Residential Loan Application Form 1003. So that is that application name that you're going to use. Now, if you are unable to sign that application, then you will need a power of attorney, which I thought was very interesting. And basically what a power of attorney is, a lawyer that will be able to sign for you and on your behalf. This is usually for situations if you're an active military, if you're serving, if you're deployed, and you need your spouse to they found a home and they need you to sign the documents, then you will have that power attorney already established so they can go ahead and take care of that for you. So that was the first part of the application. So what do you think, David? What is your thoughts on that part?
Yeah, so let's see. Kind of piggybacking off of that, the Form 1003 is utilized for most loan products, and so that's why it's interchangeable of application and the Form 1003. So anyone throws Form 1003 at you, it means application. The VA lenders, because that was an interesting thing too, because it was like, well, what's a veteran going to be doing getting a conventional loan when they may take advantage of the VA loan, right? Like, oh, well, what if they've already utilized their VA privilege, if you will, to get a house and they wanted to buy yet another house? Well, that's when this would kick in because they can only do that one at a time.
But in spec to the VAs, like they get their benefits. For VAs, just a little tidbit, like you'll need your certificate of eligibility, then you get your benefits, but you can only use your benefits for one home that you live in and only an owner-occupied home. So maybe they're looking into buying a second home, so that's probably why they will use the conventional, because they can only use their benefits for one home at a time.
Yeah, that's a good point. It's like investment property, vacation,
Right.
secondary. These are these other examples too that this is why it's important that they've captured this idea of like why a VA handbook, these are the guidelines, we still follow through on that, whatever they specify. And it's like, but what I'm not reading the VA guidelines here. I'm reading, Fannie Mae. But yeah, so
Exactly.
that's a good point. Like when I was reading this at first, that threw me for a curve, I'll be honest. I was like, what am I doing here? When it
Okay,
comes
let's
to
go over those lists
go over
briefly
that.
because I missed it. Yeah.
Okay. Yeah, so it's like it looks like it contains it within a table, and it just talks about like, you need a ratified sales agreement, if
Right.
applicable, a borrower reconsideration of value, abbreviated as an ROV, the supplemental consumer information form or form 1103.
So HUD is basically when you do your 4-hour education. So
Hmm.
that's what that is. So you're prepared to buy your home, and you need that for any type of benefits for homes. If you're trying to get any grants for your home, they want you to do that 4-hour counseling session.
10
Yes.
different organizations nearby where you can go and get that education. So you're better prepared for home ownership in case maybe you're a first-time home buyer, right? This is really important.
Exactly. Oh, and I
Yes.
wanted to piggyback on something David
Yeah,
said.
yeah. No, no, you're
The
good.
RV is basically looks like it's the appraisal done in your home.
Okay.
It is the lender's responsibility for confirming that the appraisal report is complete. So it is
Yeah.
our responsibility to make sure that's done.
Just a fancy name for appraisal, right?
Yes.
Borrower reconsideration of value, ROV. I mean appraisal, appraisal. And then from there we have the escrow/closing or settlement instructions, if applicable. So presuming that the person is going escrow, because not everybody necessarily needs to or wants to go escrow for one reason or another.
So when do we need to go escrow?
I think for the most part, yeah, FHA, yeah, absolutely.
Yep. Only FHA requires you to go escrow.
Yeah, whereas everyone else, it's optional. I recommend it usually to customers just because it keeps everything together and you'll never find yourself shortchanged when it comes to the taxes, when it comes to the insurance. That's just another thing you have to worry about. Whereas everything's together, you just make the one payment, you're good to go with all your housing.
I say if you pay your bills on time, like I'm good with paying my bills on time. So I don't need anyone to tell me to pay my bills. So if you feel like you're confident that you can do it, then do it. Because that can save on your mortgage note. But if you feel like you need that assistance, take advantage of it.
The most important thing that we as loan officers and mortgage professionals is to make sure that you have a good understanding of what your options are. So that way, ultimately, you are the one making those decisions. Don't ever have anybody make a decision for you, especially when it comes to this. For most people, this is their biggest financial investment ever.
Exactly.
Or purchase, if you will. There's last two bit here. They're kind of like a general broad strokes. It looks like any other information or documentation used to verify, clarify, or substantiate information in the borrower's application.
So basically, what are we going to ask for, David?
Oh, some of the information we may ask for. Well, a lot of it's going to be based around income.
Income,
I think
pay
that's a big part of it.
stubs,
Yep, pay
bank
stubs.
statements,
That's right. Tax.
W-2s.
Right, taxes, like tax returns. Like if you have a business, that's depending on how you get paid.
Right. Or bank
There can also,
statements.
yeah, the bank statements. Go ahead and elaborate a little bit more on the bank statement. I think that's a new territory for a lot of folks.
Oh, thank you. Yeah, so that's for if you are self-employed and your income cannot be verified through W-2 because you're self-employed, so you're a 1099. Then you have to be, typically they want you to be self-employed for at least 1 year solid. So they can go through 12 months of your business bank statements or 24 months of your personal bank statements to find out what your monthly income will be, to calculate that. And that can be used for any kinds of loans. That would be more considered of a non-QM loan, and that's another, bandwagon. But there are ways to get you into your home, and they have made it more open. Like I said, like if you're self-employed, if you own more than 25% of that business, then you can use your bank statements. You can use your profit and loss statements on your tax returns to qualify your monthly income to see if you can afford the loan.
So those are some other examples of what other documentations they're specifying here. And then, of course, it goes into all other documents used to make prudent underwriting decision, including but not limited to the credit report, appraisal, like it was mentioned above, inspection, that's a newer one, things like that help to get to that underwriting decision. But again, with underwriting, it can be very finicky. So if we ask for it, send it. If we don't, perhaps don't send it.
Verify with us, verify with your loan officer first
before you send it over. Yeah, because it could delay things significantly. Yes. And for other loan officers watching, that's probably a good practice. Many experienced loan officers have said the same, so I agree with that. Oh, this was important, which was talking about any available technology may be used to produce copies of the documents in the loan file. So that kind of eliminates the idea of, well, can I just go digital? Then yes, you can. According to Fannie Mae, yes, you can. Copies of documents provided by the borrower may be photos or scanned versions of the original documents. I know for a lot of different industries, if I took a photo of something, they would tell me, oh, I have to scan it. You have to get a scanned version. Well, Fannie Mae, they're like, either one's good as long as it's legible. It doesn't say that there, but I imagine it's pretty much assumed I have to be able to read it for it to be acceptable. But that's cool because it's convenient for folks. It's like, hey, I've just got my my camera on my phone. Is that cool? Yes, yes, it is.
Yes.
Just make sure I can read it, please. That's the big one. Definitely ask before sending too. I think that'll also help so you don't have to send like
Yeah.
a billion things or, guess and check, playing phone tag, all those types of things. Let's see. The next part of this section, the transmittal summary and desktop underwriter, or DU as it's called, analysis report. So that's the form 1008, which is identified as the Uniform Underwriting and Transmittal Summary, which summarizes key data from the loan application package. So with Fannie Mae, DU is their automated underwriting, or their AU. This is going to help with the underwriting decision ultimately, because it's kind of the summary.
Exactly. Right.
So
So they're going to go over everything and they're going to say if it's approved eligible or approved ineligible. Our goal is to get approved eligible. So once we submit that with your credit report and your complete uniform residential loan application 10003 and all your documents, they will automatically generate and say, okay, this is approved, eligible, but we also need to verify their income. They need to verify this, make sure your debt to income ratio is smooth enough, it's low enough to get you approved. So that is like the last step that we look for to get you that pre-approval. Send out that pre-approval letter so you can start home shopping.
that's right. That's the fun part, right? The
Yeah.
house hunting, the home shopping, move, all the
Yes.
potential, right? You're looking at that going, ooh, I could see that it's a lot of that going on.
We want to make sure we get that all smoothed out in the beginning and cleaned out in the beginning, because once we get to the closing, we want to not backtrack and be like, oh, we forgot this and that. We have everything. So we really rely on that DU desktop underwriting decision.
When you're competing with others for the property, when you're doing
Right.
your bids and you're trying to get into contract, we've done the pre-approval, we've done all this other stuff, pre-underwriting, even depending on where you're coming from. You have a very strong bid at that point. It's like, look,
Yes.
I have everything ready to go. I know for a fact that I can afford this much house. That's how much that house is. So the seller finds that very appealing. The only time that that's probably always going to get trumped is if someone straight up pays cash. But that's
Yes.
that's not going to be too common, hopefully. Remember, representation is important for our real estate agent friends, extremely important, especially as we get closer to July as of this recording with the whole NAR settlement. But that's another topic for another day. For loans underwritten with desktop underwriter, the final desktop underwriting or DU underwriting analysis report must be retained in the mortgage file. So if it's utilized, that's when it must be retained in it. Any last thoughts on this section before we move on to the next, Bathsheba?
Oh, yes. Just wanted to tell a difference between underwriting and loan processor. Do you know the difference between an underwriter and a loan processor?
Underwriters,
Okay.
their main focus is to protect the lender or protect
Mhm.
whomever they are representing. They don't want to take on the risk that means that the lender, or the person who's lending the money, in other words, is going to lose out, right? They're going to try to alleviate that risk as much as possible while still hopefully having a transaction, because obviously that's important too. So there's that fine balance between too much risk, too little risk, and then can we do it? Can we not do it? Right? Somewhere in between those two pieces. Whereas like a loan processor, right, was the other one we're comparing this to.
Yes.
For a loan processor, they're looking out for the file itself and just making sure that it makes sense to present it to underwriting, because they want to try and make this as smooth as possible, making sure we've got a solid presentation for the underwriter. Because if they don't have that, then underwriters going to go back and forth, back and forth, back and forth. There's going to delay things.
Perfect. Perfect. That's exactly right. The loan processor is the first part. They're the ones that make sure the file is in order. Send it to underwriting. Underwriting makes the decisions to say if it's a go or no go, and this is what we need. And when you get your application and when you see your fees, they both need to get paid. So I just want to let everybody know the difference between an underwriter and a loan processor. They are also part of the home ownership process, purchasing process, and they also get paid as well.
Oh yeah, yeah. Everybody in the transaction, in one way or another, is going to get paid unless they're doing some sort of, what's the word I'm thinking of, like donation type of thing.
Donation, yeah,
Yeah,
right,
there's
yeah.
some loan officers out there that just like, oh yeah, I've got plenty of money. I just do this for fun, and so I just
Awesome.
eat all the points and give it to the people. But obviously, that's an exception. For a
Right.
vast majority of us, this is how we make our living. The next section we're going to be reading, which is kind of brief, is B1-1-02. which is the blanket authorization form. It's authorizing, right, that we are allowed to get this information. It's super personal, right? Super confidential.
Yes. Hmm.
We're going to know things, okay? Just so you know, that's what this involves. Like if we're going to get money lent to you, then they want to make sure that they're going to get that money back. And so to do that, they have to go into your personal finances. And I know for a lot of folks that can be a little intimidating. It can
Right.
feel a little uncomfortable, but know that all we're trying to do at the end of the day is to make sure that you can qualify for a loan and get your home sooner than later. Because obviously, everyone could always do cash, right? The
Right.
Dave Ramsey camp, let's do cash for everything. And you know what? If you can do it, by all means,
Do it.
that's awesome. Like,
Yes.
do it that way, yes. But for a lot of people, the timing isn't going to work out so well for that. And so, usually, the mortgage is the way to go.
I just want our clients to trust us. Like we've done the work, we studied our butt off. We took an investment, we did our own investment, we put our own funds in here, we did our background check, we did our credit check to show our trustworthiness. So it's important that our clients trust us and be honest with us. We all start from, some of us started from humble beginnings. I know I have. So the passion that we have is to make sure you can get a home, even if it's not your forever home, but your first home, because real estate is always a great investment, especially where I am in South Florida. It's a great investment. Even if you wanted the 4-bedroom house, but only got approved for a condo, hey, get that. If you can afford that condo, get it. That condo is going to raise in value. So it's important to stay in communication with your loan officer. It's important to trust them and be honest with them. There's no judgment zone because we're here to help you get your home ownership goal.
For the loan officers who want to kill it, all right?
Yes.
So anyone who comes your way, even if they don't qualify, that's what we call a nurture. And that means you got to give them advice or give them some information,
Educate them.
right,
Yes.
about what they can do to then qualify in the future. Because,
Yes.
it's not like a one and done type of thing anymore. For
No.
loan officers that truly want to kill it, you are staying in contact with them, not like every day, but like, once every 3 to 6 months, you're reaching
Yes.
out, you're keeping base with them because front of mind, right? And then of course for them to keep in mind like, okay, this is the best wealth building thing that we know of. And that's always been solid for the last almost 100 years now. So yeah,
Right.
this is super important that we're making good decisions and that we're also making educated decisions. So the blanket authorization, that is the form that says, yeah, guys, take a look at my situation and tell me what you think and give me some advice and let me know what I can do. That should be what the experience is like, in all honesty. If you're not getting that experience for one reason or another, that's obviously not ideal. And then for loan officers out there watching this, always shoot for that experience because that's the way to go.
That's awesome. Let's go to allowable age of credit documentation and federal income taxes.
Yeah.
So
Okay. What you got?
some lenders don't need your credit, your tax return. Sometimes your W-2 is just enough. Some will need it, and we also need your bank statements. And Fannie Mae wants you to have at least 2 months of consecutive bank statements to verify your income. And make sure they want it to be seasoned. What's that? We like to hear the word seasoned for at least 2 months. So any new money, it has to be seasoned in your account for at least 2 months for it to be used. As well as, you're welcome to get gift funds. Some lenders don't require, as long as they say this is a gift and write a letter and say, hey, this is a gift, and they don't have to pay it back, you're good to go.
Man,
I think,
seasons, right? Season fun. When I first heard that, I was like, so what's the spice? What's it gonna be? Is it cayenne? Is it pepper?
it's cayenne. I like that. It's spicy.
It's
It's
thyme,
cayenne. You're
Is
so
it
excited
time?
that you
It's
got
always
it.
time. Yeah. Yes. One of the things that I highlighted was for all mortgage loans existing in new construction, the credit documents must be no more than 4 months old on the note date. So there is a time limit. Okay.
Yeah.
When it comes to when we've pulled your credit, we're looking at your credit, that report, you have 4 months according to Fannie Mae. That may be
Yes.
different in other guidelines, but Fannie Mae says, hey, if it's over 4 months, we got to do this again, folks. So
Yes.
that's another reason why it's really important that your loan officer works hand in hand with your real estate agent. So that
Yes.
way you don't end up spending, multiple funds for multiple credit report pulls. Some types of sources of income requires lenders to obtain copies of federal income taxes, like personal returns and applicable business returns, which I think we've touched on that already in this conversation. But then it goes in and it clarifies like what it means by most recent years, because that's kind of a broad term. But in this
Mm-hmm.
context, it then gives a little example of like, depending on when you file your taxes, right? So for most
Right.
people, that's April 15th. So prior to April 15th, it's going to be the year prior to the year that you're in, the year, I guess, that you're in at that moment. And then as of April 16th, so after the tax date, then it's going to be the year that just finished tax wise. So it goes into clarification about that. Most of the time, we're going to want 2 years of pretty much everything and anything. There are some exceptions. And then it goes into even further detail, breaking down specifics to that 2 year marking. But again, it can be important if we have one of those like right at the right at the cusp of the year type situations. Maybe they haven't been working for a full 2 years or it's just barely getting there. In those moments, we may have to reference this part of the Fannie Mae guidelines to really determine, okay, do I have enough information or do I need a little bit more? Do we need to wait a little longer? Then we can use that table at the very bottom of that page to really get into the nitty gritty. But most of the time, again, gold standard, 2 years.
In those situations too, if you've not been working for 2 years, you may need a letter saying
Hmm.
why is it? Were you on medical leave? Were you in
Yes.
school? Were you, we just need an explanation, and then underwriting will make their decision. And they just want you guys to know that, hey, these lenders, they want to give you the money. They want to help you. We want to help you.
Yeah,
Help us help you. If we
that's
can just
right.
explain it, like you said, it's in your favor. So just be positive and just give them what they want. And if you, like you said, if you can explain it well, we're good to go.
So I think that is actually covers the
Yes,
three
we did it.
sections. Wow, look at
Woo!
that. Look at us reading guidelines and not falling asleep. No, I'm just kidding.
Yes, I'm not falling asleep, keeping you up.
That's right. Wake up. Wake up. Yeah. So yeah, let's talk about some takeaways. Bathsheba, what are some takeaways you want to talk about from today's session?
I learned a lot. It was a good refresher. I do want to talk about what is Fannie Mae though, because people were like, "Well, what's Fannie Mae? I've never heard of it before."
Yeah,
They don't have a commercial. They don't really advertise.
right.
So, well, Fannie Mae started in 1936. Since 1938, they were able to provide reliable source of affordable mortgage financing across the nation of the United States of America. Good old USA. So they
Yes.
support home buyers and homeowners by creating solutions to expand affordable home opportunities. Not just buying a home, even renting a home, looking for apartments. They help with that too, which that was a good takeaway. I didn't know. And I looked on their website and saw that.
Straight from the source. Nice.
Yeah, their source. And they do not originate the loans. You
Hmm.
cannot go to Fannie Mae's office in Atlanta and be like, hey, can I get a loan for a home? No, they don't do that. Instead, they acquire mortgage loans made by lenders, made by us, and then issue guaranteed mortgage-backed loans. So they guarantee the loans for us.
Before
Okay,
Fannie Mae, it's like every bank only had so much funds, right? To
right.
give to people to buy a home. But when Fannie Mae came along, it was like, well, we need to alleviate the bank's burden of not having enough funds to give to other American citizens the right to be able to go out there and get a house. So Fannie Mae's like, okay, cool. I'll just buy all the existing mortgages to replenish the funds to that bank so they can go out there and they can buy more homes. That's what created the secondary market. So that's what Fannie Mae is when they started and what they do. Um, they are a government sponsored entity. So
Yeah,
they've been private before, but after the whole 2008 situation, where a lot of subprime loans were out there for houses and everything crashed,
right.
then the government had to conservatorship for Fannie Mae and Freddie Mac, but we'll talk about Freddie Mac in a future time frame. It was
Yes,
exactly almost the same thing as Fannie Mae, just so you know, also and came along much later. But yeah, no, Fannie Mae, the original gangster, and
yes.
it's not actually a person. See, people were like, "Is that a person? Like, who is that?" It's Fannie Mae, from the 1930s. Yeah, no, it's not a person. It's an entity. It's derived from the abbreviation, the Federal National Mortgage Association. If you take each of those letters, right, you get FNMA. So I guess someone got creative and was like, well, that's almost like Fannie Mae. Did you have anything else you wanted to add on to the takeaways there for you, Bathsheba?
Nope, that's all. I just want to say thank you for spending the time with us. I hope we educated you. Please reach out to us. We're here to help, and you will see us again. We want to continue the conversation as we educate you and educate ourselves.
So, of course, wherever you're watching this, make sure to follow, subscribe, like, love. There's a plethora of other things, I'm sure, but do those things. So that way this gets out to more people. You know?
If you have questions, ask questions.
Yes.
Ask questions in the comment box. We'll answer them.
We'll get this rolling. A good conversation here today. So thanks for joining me, Bathsheba. I appreciate you.
Thank you.
And y'all have a great, blessed day.
Yes. Bye-bye.
Until next time.
Yeah.